Okay, so we're gonna look at our trades today. Two trades that we made in gold and Chfjpy. If we go to the fundamentals, we know there was a FOMC meeting tonight with Warsh having his first ever meeting. They explicitly signaled that interest rates will need to remain, quote unquote, higher for longer. To add to the hawkish tone, an easing bias was removed and replaced with an emphasis to the persistent inflation risks that necessitate a firm hand. And so that is very hawkish. And this is why we went short on gold and Chfjpy. Now, if we look at the dollar during the FOMC meeting, we see that the dollar has now come up. But then if we notice from that previous swing low to that previous swing high, we already see that price was already moving down into that discount pricing below that 0.5 fib. And it was sort of creating that range until the announcement was to take place early this morning. We saw that move up in the dollar index, which means that gold would now plummet down. In the 4-hour time frame, we see that gold has been making these lower highs and lower lows very consistently since the start of May. And we see those impulse legs down very consistently made in the 4-hour time frame. And we see that every single time, if we draw from our swing high to swing low of those impulse legs, we see that price came up back above 0.5 fib in premium pricing. And so we anticipated the same reaction here. We see that swing high and that swing low. And we see that there was liquidity in premium pricing. That was the liquidity, which it snagged over there. However, price was very, very impulsive on its move up to that liquidity. And so we see that price had to consolidate a bit, decrease that momentum that it was having. And we see in the 1-hour time frame, we see that fake out here and fake out there until finally price accumulated here with those early sellers taken out by that internal liquidation, which was prior to the FOMC meeting, which also tells us that the institutions and the banks were already pricing in on a higher, more premium price for that announcement. And so we see that, once again, that internal liquidation, that external liquidation, and that change of character in the 1-hour time frame that broke market structure, creating a new and valid area of supply in the 1-hour time frame. And so we see our entry, and we look, actually we entered here on the 30-minute time frame. Once it broke that low, you can notice if we go to the 15-minute time frame, the price actually came up to that new and valid area of supply. In line with that, we also had two other confluences. We had that daily open, which was yet to be grabbed, and also that yearly open, which also provides an area of support and resistance. And so we got in there, half an hour, we see the price came down to our TP. And so we look also at Chfjpy led by the Swiss franc. And so we see the rivalry between the dollar and the Swiss franc. And if the dollar raises its value, the Swiss franc as a safe haven currency as well would now lose investors, and money would flow out from the Swiss franc into the dollar, making the Swiss franc relatively weaker. And if you pair that up with the Japanese yen, we will see that the Swiss franc would now plummet downhill. And so we see in the market structure, Chfjpy was already making those lower highs and lower lows ever since that beginning of June. And we see that price was making those impulses down consistently, and price was also coming back up into premium pricing every single time that it made that impulse down. We see that impulse down, we see that came up above 0.5 fib premium pricing, and we see the same way in the next impulse down from swing high to swing low, the price came back up into premium pricing above 0.5 fib, came down. And so we were anticipating the same to happen right now, which it did, but price again was very, very impulsive on the way up, and there was not much liquidity on that impulse leg down, except if we go to the 30-minute time frame, and we'll see that that was the last descending high of that impulse leg down. And we see the price came up there, and beautifully price came up and liquidated that. However, price was still very impulsive at this point, and so we see that fake out that happened over here. That was the fake out that got those early sellers. Early Asia session on Wednesday. During the start of London session on Wednesday, we see those early sellers getting taken out with that internal liquidation. When finally we have that external liquidation, that internal liquidation, and that change of character that broke market structure, creating a new and valid area of supply in the 4-hour time frame. And so when price came back down, I was waiting for that retracement back into the daily. However, because of the expectations that Wash would have a rather hawkish tone, I came in aggressively with that. And when price went down and created that very solid candle in the 4-hour time frame below that previous fractal low, I immediately entered and placed my stop loss above that 4-hour supply and targeted just right below the weekly open, targeting a 1.5 risk to reward. And so that was it. And this trade was absolutely perfection. And these two were just amazing and very cooperative Forex pairs.